Hey guys, Mike here. So, boy, what a fun day yesterday. We get more tariff tweets out there to create more volatility, send the markets down, and all that fun stuff. So, it was a fun one. Hope you enjoyed it. Now, today, of course, we get to answer all your questions, and I had to do some research on what the heck a sovereign wealth fund was to answer some questions. What's going to happen if the government actually does lay off a bunch of people or fire them, actually, not lay them off, and try to cut that deficit in half? What's it going to do to the market? Also, some other ones concerning, discounts, premiums. What do you mean by buying and selling those things? Also, we're talking about gamma levels. We're talking about PLTR, some other things. So definitely load a video here. Also, even having a question about Bitcoin, hoping you can answer for me because I don't know the answer to it. Now, looking at the first one here, it says, could the proposed sovereign wealth fund be used to directly prop up individual stocks in a legal way as opposed to when a central bank does it, e.g., during the COVID crash? Wouldn't this be a more precise tool to control markets as opposed to doing it the hard way with the Fed? And so first of all, let's just talk, are we going to have a sovereign wealth fund? They've talked about this, but understand countries that have this, they don't run deficits like we do. We got a $2 trillion deficit. They actually have an asset, from what I read, that actually produces something so they can generate money out of this. For us to have this, though, because we have a $2 trillion deficit, we would actually have to have the Treasury issue more debt just to fund it, from what I understand. Or the other way to look at it is, if it's going to be funded by tariffs, well, guess what? That's money not going to the Treasury, right? So that's money not paying down the deficits, and you're going to have tax cuts on top of it. So that's going to be interesting. So I'm not really sure how you're shrinking the deficit and having a sovereign wealth fund. And so are we going to have one? That's what we got to figure out. The other thing is going to be like, is it even legal to have one here? All that fun stuff. Who knows? The other question is, do you really want the government, sitting here just picking and choosing, what they're going to buy, picking and choosing winners and losers again? Now, that's my biggest question to you. Again, I always say when every emergency, what do? Fed, please help us. And they go, buy ETFs and corporate debt for the first time ever. And they're buying, we're ending up buying car companies in 08 and all this fun stuff. And so, I don't know. It's going to be interesting to see if we even have one. It will definitely be another way. There's no doubt about that if things get bad, then absolutely they can go prop up companies. The question is, who's going to be running it? And my biggest thing is, don't we all agree there's already enough corruption up in Washington? Really? Look at all the insider trading, guys. Can you imagine? Now we want to give the government, whether it's through tariffs, our tax dollars, whatever it's through, actually the ability to do more corruption, the ability to pick more winners and losers if they want to do that. And by the way, they have to make money. They have to generate money on this thing. It doesn't mean just because we have one, it's going to generate money, right? If they pick losers and all of a sudden the market does crash and they're into stocks or into crypto or whatever it is they're in, and it goes down, it's just like our accounts. It's down. They don't generate no money. It don't help pay off the deficit. It don't help send us out checks or anything like that. So I think that's one thing to keep in mind when it comes to this, but I think it is definitely going to be another way, or what they would actually use it for is for emergencies, things of that nature, but I also think you're going to see just ungodly amounts of more corruption going on. And don't forget, just because you get this under one administration, remember, if it stays in place, there's going to be Democrats in charge at one time in charge of this thing, swinging back to Republicans. So, for those who just want to say, oh, because Trump's in charge, we want it, well, he'll be out of office at some point in time. The man's 80 years old. Will you like the person that's going to be running it then? All right. And what are they going to try to do with it? So now that's a whole another thing to think about when it comes to that. But it's going to be, to me, this isn't a sovereign wealth fund because you don't have an asset to actually generate income. You're doing it with debt. So basically, isn't it just, I don't know, some kind of investment fund then? And ain't that what they do? Take out a bunch of debt, buy a bunch of stuff, make money, charge fees, right? And so I don't see how this is a sovereign wealth fund, by the way. Now, next one here, how does spending reduction from government and Fed employees, termination, Elon Doge is doing, impact the GDP and employment reports? Do you think it will slow down the economy? And do you think it will force the Fed to cut quicker, or the impact will not be significant to have an impact on the economy? This one kind of ties into that. As we all know, in order to buy stocks and equities, we need liquidity. There needs to be cash to deploy. If Doge is cutting lots of cash from going out from the government door, is this keeping markets down in the short term? And these are two great questions, right? And understand, we are in an experiment, folks. We don't know, because I can't even remember the last time we tried to actually cut the deficit significantly. They always say they want to, and then it just grows bigger and bigger and bigger, and more government spending on every party we have put up there. And so we're in an experiment. Are they really going to try to cut this deficit. That's the big thing. You just heard me talk about the sovereign wealth fund. They're going to have to fund that with debt at this point in time. And so, you know, and as far as employees being laid off, remember, they're getting paid through September. I guess the ones that take it, they said 20,000 took the deal. So they're still getting paid. So you shouldn't see any kind of effect on that at all for the rest of the year, really. And so, again, if they actually do go through with this, this is what I don't understand. If they go through, let's say they slash a bunch of more employees, they're gone, and then said, you know, year end, they're gone. What they're trying to say is the argument is if we cut this deficit down and we lay off all these people, that don't worry, the private sector is going to pick up the buck. The private sector is going to start spending more. The private sector is going to start hiring these people. That doesn't make any sense. Does that make any sense to you? I mean, all I'm hearing is layoffs, or, you know, I don't hear anybody saying we're hiring a bunch of people out here in the private sector. I don't hear that. Do you hear that anywhere? Do you seen it anywhere? And so I don't, unless they're going to Walmart or something, sure, McDonald's, whatever, but, you know, not the big companies. And so, you know, and that's the other thing, liquidity, right? The reason why I show you the chart, the debt, the Fed balance sheet, and the stock market, right? They're all doing this, and all of a sudden, the debt went like this, the Fed balance sheet went like this, and well, guess what the stock market did? Woo! Went just like that too. And it is liquidity. So that's what we got to figure out. Liquidity has to come somewhere. You can't just cut $500 billion off of government spending. Let's say it was legit $500 billion and think that something's not going to happen to the market, right? And so, again, we got to figure out what the market wants to do, because remember in 2018, it's called a taper tantrum for a reason, right? The Fed was running off the balance sheet, trying to raise rates to a whopping 2.5%, by the way. They only ran the balance sheet off $700 billion. They've already run the balance sheet off $2 trillion now, and we're sitting at 4.25, 4.5% rate right now. Way higher. And they sold the market down. It was extremely volatile. It was a mess. And so we know how sensitive they are to liquidity. I also showed you the Treasury account. And when they're draining the Treasury account, how the stock market's going up, and then when they're raising the Treasury account, the stock market's either going sideways or down. And so that's what we got to figure out. And we don't know, because everybody can say they're going to do something and then not do it. Okay, let's keep that in mind. So that's how it works. And so we're going to have to see, if they start to do this, how the market reacts to it. That is the big thing here. And so we'll see. But remember, there's ways to do something, and then ways you actually didn't do it. You did it, but you didn't do it. And what they're doing now is they're paying these people through September that we know of. I guess that's what they're saying. And so we'll see if that's what they're going to keep doing, firing people and keep paying them for the rest of the year. So you don't feel the effects of unemployment. They're still able to spend money. They're sitting home for free getting paid, going out shopping, enjoying themselves, and getting paid while you're at work every day. So not sure I like that. But anyway, it is what it is. Now, could you explain more about what you mean when, say, selling in a premium and buying at a discount, especially when it comes to the Mag 8 and semis? Thanks, Mike. I'll show you one I showed in the member video yesterday, which it's just the SPY, but I showed you on Google or what I'm talking about. And when you see that I put this in, what was it, Thursday night's video? And I said, boy, it'd be nice to come down here in this 4-hour fair value gap, actually get into a discount. And of course, we came down finally and got to a discount. But when you look at the market, normally what happens is, as I explained to the members, when you look at this, we'll pull a fib from a swing low to swing high and all that fun stuff and look at it as it came up. When it's coming up, you're looking to see when it's in a premium, right? And so we're talking about selling in premiums, buying in discounts. And you can see when it was coming up here, and this is a good market structure, it would get up above 0.50. Anything above 0.50 is premium. Anything below it when we're coming down is discount. And you see it got up there, golden pocket, boom, exactly, sold back down. Came back up in the premium again, sold back down. What are we doing though? Creating higher highs, higher lows. Come back up in the premium, boom, we sold back down into what would be a discount in a shorter term time frame. But we sold back down there, right? So, and again, what's it also hunting out liquidity? So it's looking for fair value gaps. This is extended trading hour. You can see them better on that when you're charting this out. So that's something I do, but I like the futures. That's probably why I do this. And so that's just an example of what we're talking about. And it doesn't always work because, again, I mean, here's another one right here. As you can see, we came down right here. We're coming back up now. So we're looking at premiums. Every time it gets to a premium, we usually come down, sell down. That gives us our higher and low a lot of times. This is what usually happens. We're going up and down, higher and lows, higher highs, right? But then when we get done with this one, you can clearly see if we move to the left right here. When I say this doesn't happen, it's right here. Look at this one right here. This is just short squeeze city and this crazy movement right here. As you can see, there was no discounts given. There was no nothing. It just went. Okay, there was hardly any kind of retracements at all in that move up. And so that's what I'm talking about. You see Google, for example, yesterday it came down in that premium below the 0.5 fib, trading down in that area. That's why it has to be an area. And that's the thing. You're not going to time these perfectly. And sometimes they don't work at all. Sometimes it wants more of a discount, right? But you'll see this on earnings a lot. Look at these earnings when they drop 20. Oh, they dropped 20%. If you draw a fib from the swing low to the swing high where that move started, I'll bet you money you're below 0.50. And then you'll see this crazy suck up in the candle, right? And that's what's happening. They don't want to buy at 120. That's a premium. They're looking for a discount to get in and buy big. And so you'll see this a lot on these earnings calls, right? You see it, especially the Max 7. Those dump down all of a sudden, just woof, suck it right back up. If you draw a fib from the previous swing low, swing high, I bet you money it's most likely a discount the majority of the time. So hopefully that helps you. Now, next one here says, where can we find out what the gamma flip zones are? Same for gamma exposure, positive and negative gamma. Haven't found anything outside the charts. I see shown on other channels. Seems like it's part of a trading platform I do not use. And one of our members put me onto this. This is where I get it from. It's like Gamma Labs, I believe it's called. And so it gives me the gamma flip, and then I use the quant data to show me whether we're, what the positive and negative gamma levels are and stuff like that. So I use two different ones. Plus, this gives me the CTA position and whether they're buying or selling. So that's where I get it from, those two sources. So hopefully that helps. And the reason why I like doing this is, again, somebody put me on this, so I started researching it. You can see just Friday, we came down here to the gamma flip zone. They defended it twice, and then you saw a nice move back up right after that. Again, I recorded this 12:30 when I was doing that, so I don't know where we ended up for the day. But you can see, and you see when we got rejected, it was the gamma resistance, right, 6100. So hopefully that helps. Now, next one here says, Mike, can you help me understand? People say Palantir is overvalued, but they crush it on earnings. So even with that, are they actually overvalued? I don't understand how to place accurate values on companies. And the next one here, which I think ties into the same thing, says, hey, Mike, I don't know where to post for Sunday question, but can you help explain how companies with such a high PE ratio seem to be booming right now? Palantir, Sound, IONQ, all come into mind. And there's different ways to do it. I mean, you can find a discounted cash flow calculator that does it for you. But understand, when it comes to, you see all those stocks are what? Technology stocks especially. Certain sectors, maybe fundamentals mean more, and maybe they actually do come into account all the time. When it comes to technology, how many times have we seen this, folks? Like, they don't care about when it comes to the fundamentals, the PE, all this fun stuff. They're just looking at going, oh, look, can you see it, Jim? They're going to have robots one day at Tesla. Okay, great, but they just missed both. A double miss on earnings. Didn't even come close. Their China numbers are terrible. The stock was only down like 1% at open yesterday. Why? Because like this. It's technology. It's technology. Look, maybe they'll do it. Maybe they'll do it. And so they'll pay a huge premium. You won't hear anything about fundamentals until they start to go, liquidity's drying up. The bond market looks stressed. Wait a minute. Are we fixing to dump? Man. And then we go, oh, we had to sell that one down, Jim, because, those PEs were too high. Woo! Right? That's when they'll start talking about it. Remember 2022? That's all they talked about. Well, the fundamentals got stressed there, Jim, and so we had to sell down. Come on, please. When it comes to tech, you've seen it too many times, man. Too many times. They'll let these stocks, and what happens is, I don't know if Palantir's in a gamma squeeze. I really don't. But there's a couple stocks I was pointing out to members yesterday, like Oklo, HIMS, Palantir. I mean, the market was going down, and those were going up. I mean, even Uber, no, it was going up too, but those three I mentioned right there are on a whole different planet. Like, just squeezing. We saw this with Tesla many times. I think we even saw it with NVIDIA at certain points in times on its rise, where they just go, whatever. And another thing they'll say is, don't worry, they'll grow into their valuation. That's another thing they'll put out there to you. And so, again, you can go in there. Like I said, there's plenty of ways. Just Google how to value this company and pick whichever way you want to do. And what you're going to find on tech companies is your price is going to be down here and the stock is up here most likely. I mean, seriously. So, and some people disagree with that, and that's fine. Please put in the comments what you think and stuff. When it comes to the technology companies, especially when you remember, there's this guy I was like watching videos about, and all he did was trade sentiment, and he became a multimillionaire doing this. And it's true. We've seen it. Like, sentiment means something, right? Like the fact that which stocks went up the most on November 5th when President Trump was elected. A lot of them were the CEOs or founders that gave him a lot of money and have an insider track. And so the market said, boom, run them up because they know how it works, right? And so there you go. For those who don't know, Peter Thiel is not only, I've told you this in one of the other Saturday videos, I mean, this guy is the quiet one of the two. The CEO of Palantir talks a lot. Peter Thiel sits in the background, but he's the maestro. right? He's already given, raised, everything else, millions upon millions of dollars, not only to President Trump, but the vice president to help him get elected to center. He's the one that actually told Trump to make him vice president. And so there you go. If you want to know how he got made vice president, there you go. And he has people working in the administration. And so that's why people are like, oh, yeah, they're going to get those contracts. So they got the inside road right now. We'll see if it pays off. Okay. So anyway, hope that helps. Now, next one says, I don't really understand the tariffs on Canada. Is it to pressure the next Canadian election? If the concern is fentanyl, why place a lower tariff on China than Canada? There's no way for me to know that, but I was thinking the exact same thing, because where does fentanyl come from? China. What part of the border does it come through? Like 99% of the time, Mexico, but you guys got hit the same. I just don't think he likes you guys, if I'm being honest about it. I don't think he likes your prime minister. So, and what I hear, it seems like most Canadians don't either, but I don't know. Maybe your guess is as good as mine. Somebody put in the bottom, like, why do you think that is? I was kind of wondering that myself, how China was lower than Canada and all this good stuff. But, what was cited was the difference in the trade deficits. So, and you're difficult to deal with. That's what he said, not me. I'm not saying that's what the president said. So, hopefully somebody out there knows, because I don't have the answer to that one. So, now last one here says, this is a long one, by the way. You can see the frustration here. Hey, Mike, quick question side of the video. Please explain this to me, because it makes no sense to me. It makes me furious. For 5 to 6 years now, I've heard the same thing by all these crypto channels, media, CEOs. They say, wow, Mr. bought 3 million of BTC or IBIT ETF inflows, 800 million. Binance bought 8 million worth. All this fun stuff. I'm going to skip down. This is a long one. Yet the price doesn't go up, or barely goes up, and many times goes down. Then you hear it's because these people buy on OTC as not to affect the market, etc. Now, correct me if I'm wrong, but I call BS. If I am pro BTC, if I'm Michael Saylor, there is no shot in blank I'm buying OTC. I will be buying straight spot. Specifically, if I was some random whale, I would want the price to shoot to the moon. I would want people to be shocked at how high it goes. I just don't buy this dumb theory that they want it to be stable so they can accumulate more and more. If I'm a billionaire, I would want to make more money, so I put 500 million on spot BTC and make an easy 250 million on that play. No way these people are so Judas and careful and slowly accumulating. I just don't buy it. Please correct me if I'm wrong, or if I'm missing something. I'm just sick of the excuses. And honestly, it's a good question, but the argument is, and I understand, I get the same thing you get, right? They buy on OTC and all that stuff, so they don't affect the price that much and all this fun stuff. But the other argument is, like, if you're really trying to accumulate, do you want the price to skyrocket on you like that? Or do you just want to keep trying to accumulate and then maybe even suppress the market down? Like, that's probably so. But when it comes to the crypto in general, especially BTC, it's not like a stock, because again, I'm not a crypto expert. I do more in the stock market, right? I own crypto, but as far as being that detailed into, what the big boys are doing with it and what's that's gonna do with the price, I just look at the chart. But understanding that, when it comes to a stock, like, I can look and see how many shares are available, right? I can look and see what the float is, how many shares outstanding. If they want more, they're gonna do a stock split. If they want less, they're gonna do a reverse stock split. All that fun stuff. When a gamma squeeze is happening and different things like that. I don't follow BTC and crypto enough in having all those things. That's why there's crypto channels to come up with that stuff, and why the price. You do see all these reports like today. Every day is like 800 million to 100, 100 billion, whatever it is. All these guys are buying like Ethereum. You see a lot like, oh, Trump just bought X amount of Ethereum, and then this fund bought it, and this fund, and the price doesn't go. Matter of fact, it goes down. And so I'm hoping to put this question out there so somebody who is a crypto expert and really has studied this stuff can explain it to us. And I'll bring it out and I'll read it and all that good stuff and see what the answer is. But so anyway, appreciate all the questions. Hope you guys got something out of it. And tomorrow's video, obviously, we'll set up next week and stuff. And we got some major data coming out, a lot of high flying type of earnings and stuff. All the real major earnings are pretty much behind us and everything. So we'll see how it goes. So anyway, please hit the like and subscribe button on the way out. Think about signing up for membership, less than McDonald's combo. It's everything you get with it. And I will see you guys tomorrow.